All right, welcome everyone to our second quarter review here for 2024. The quick version is markets are behaving, so that's always good. Momentum trade, big tech outperforming value so far this quarter. International markets are up, and emerging markets actually are up as well. Bonds flat on the quarter, and also kind of interesting dynamic. We have the Dow Jones was actually slightly negative for the quarter, with the S&P being up over 4%. So interesting dynamics there. And last but not least, the bond market, staying flat on the quarter, but has recently popped actually with some softening inflation data.
Yeah, that's right. So we saw a couple of recent data points pointing to the cooling inflation, which is obviously calming for Federal Reserve rate policy. You've heard us time and time again in these videos really emphasize how markets are moving and reacting to the Federal Reserve. So every time Chairman Powell speaks, early here in July, jumping already to the third quarter, we are seeing a lot of calming come as the latest inflation print has been positive and showing that trajectory of cooling, which starts to reintroduce rate decreases. Chairman Powell talked about, really for the first time, he talked about the balancing of risks, not just taming inflation, but now the emerging risks of persistently high interest rates. So the narrative is starting to move the bond market, which we see as actually a pretty good place going forward. Yeah, just given where bonds have been, they've been not enjoyable to own, particularly as that tech momentum part of the market has been driving, but we feel they're pretty well positioned going forward.
Absolutely. Other big thing happening here this year is the election, and many of you know, talking to us in our meetings, we're kind of beating a dead horse there. We look at the data, and the reality is the data has shown historically elections really don't move the needle a tremendous amount one way or the other on the market. I mean, you're looking at historical double-digit returns regardless of political party in the years preceding an election and the year after an election, citing the S&P 500. So, again, that's not what's going to move the needle by and large. However, uncertainty may.
Yeah. That is always the general rule here, is that markets dislike uncertainty, and that's when we see volatility pop. So as it relates to the election, because this is a common question we're getting as we're meeting with all of you, it's really that risk is the most persistent. So for example, post-election day uncertainty, court challenges, things like that. We could see some bumps in markets if that's the way it goes. But the markets do have a historical tendency to look at the rosier side of things once all of that is determined. And so we do not advocate shifting allocations of your portfolios simply because of that fear of what the elections might do to the investment markets.
Absolutely. So hope everybody has a great finish to their summer, and we'll see you guys next quarter.
Yeah. Take care.